Welcome, everyone, to another episode of the Proventure Podcast. I'm your host, Giancarlo Carangelo, and today I am without my partner, Anthony Loggia, as he's on a temporary leave of absence, so we'd like to wish him all the best, and we can't wait to have him back in the studio with us. We brought on Adriano Buonno from Group Orbis today. And I decided to have Adriano on today's episode because we wanted to address a very specific subject that we've been hearing a lot about. I've been getting a lot of questions. Can Canadians invest in U.S. real estate? So I figured it would be an awesome idea to have Adriano on, and we could dive into a little bit of detail on how, as a Canadian, you could invest in U.S. real estate despite being a resident. Adriano, say hello to our listeners.
Everybody, Proventure family, Proventure community, how we doing? I'm very glad to be back. Thank you very much for inviting me. Yeah. We give our best to Anthony. We love you, buddy. Hope to see you back soon. And I'm back to be here. I'm proud to be here, in this beautiful new studio. Yeah. We upgraded from the last time I was here. Shout out to Louis, our producer over here in the back.
Yes.
And I'm excited to be here once again and getting this going.
Yeah, and it was great to when I decided to address this subject about Canadians investing in U.S. real estate, I immediately thought of you because of the news. So for our listeners who do not know about Group Orbis and its capabilities, why don't you just give them a little recap?
Absolutely. So Group Orbis Mortgage Group is a mortgage brokerage firm based in Montreal. They have expanded throughout Canada, so there's offices in Ontario and Manitoba, other places in Quebec as well. And they recently expanded to create Orbis USA. So the main office is in Florida, it's in Boca Raton, and they have the capability to finance in all 50 states. Amazing. So whether you're looking for, a beach house in Florida, a little mountain ski chalet in Aspen, Colorado, wherever it may be, we can finance you the whole way.
Yeah, and that's great news, because we have a lot of people that listen to us and follow us and write in and ask us, how do Canadians invest in U.S. real estate? And some think it's more complex and complicated than it actually is, but it's actually a lot more feasible than we think. So as a Canadian, despite not being a resident of the United States of America, you could actually purchase U.S. real estate from here in Canada. And, so we're going to dive into that a little bit and we're going to talk about it. So why don't you tell us, for example, a type of loan that a Canadian could get as an investor purchasing in the U.S.?
Yeah, absolutely. So first of all, the U.S., it's great for many reasons. Yeah. First and foremost, depending on where you are, it's better weather than here in Canada today.
That's true.
That's an incentive to, go there and have a vacation home or whatever it may be. There's investment opportunities, which we talk about all the time. And really, it's important to know that the U.S. is, again, the land of opportunity.
Yeah.
And if you're looking at Canada or Canadian financing, we have very, very good banks and lenders, this and that, but you are somewhat limited to your options.
100%.
So I would say in Canada, there's about, 40 or 50 lenders. You're talking about A banks or virtual lenders. You could talk about B lenders. Then you have, quite an extensive list of private lenders. But the United States, again, it's the land of opportunity. There's a lot less regulation, you could say.
And
hurdles, absolutely. So there's really tens of thousands of lenders.
Yeah.
And, people, not just Canadians, but any non-U.S. resident looks to buy property in the U.S. So a lot of these lenders have, circled this market and come up with products that really appeal to these types of investors, whether they're looking to buy properties just to rent out, for long-term rentals, buy properties and have short-term rentals, just have second homes. So there's really a big market there that a lot of lenders in the United States have really opened up to, and they've created specialized products for these people. Again, non-residents, people just looking to have a secondary home or to invest full-time.
Yeah, and we started purchasing in the U.S. and we started doing our research and looking into it. And one thing when we started doing our homework that we, came to a very quick realization is that it's a lot more feasible than we thought. And at the beginning when we didn't quite understand it, we thought it was near impossible. And then when we started to not only do our research, but meet people doing it, it was a lot more feasible.
Yeah.
You know, like for example, there's, and you could confirm this with us, less qualifications to go through as a U.S. investor purchasing from Canada than there is actually, in my opinion, as a Canadian investor purchasing in Canada.
Yeah.
So, for example, you know, here we have to go through credit union checks, we have to go through employment checks, you have to have a certain amount of, you know, days with an employer. And in the United States, all you need is a 30 to 35% down payment, and then you could qualify for a DSCR loan.
Absolutely. You said the magic letters.
DSCR, yes. Or DCR, debt service coverage ratio or debt coverage ratio. So for our listeners, Adriano, why don't you let them know exactly what type of loan that is?
Absolutely. So again, I mentioned previously that a lot of lenders have opened up to this market and created specific, you know, products and programs for these type of investors, for these types of clients. So the most notable one, again, like you mentioned, is a DSCR loan. So these DSCR loans are offered by many lenders in the United States, and they're curated for, you know, non-residents. So what it is essentially is that the lenders are going to look at the property you're interested in purchasing, and they're going to look at, you know, all the rent that would bring in monthly.
Yeah.
So whether it's, you know, a condo, a single family home, a fourplex, an eightplex, whatever it is. And then they're going to look at what it would cost you monthly. So in terms of taxes, in terms of insurance, in terms of mortgage payment, obviously. And they're going to look at the debt service coverage, so the ratio. And as long as it's a 1-to-1 ratio or more, the lender is going to finance you. Now, there are some little guidelines to follow. As you mentioned, you do have to put typically a 30% down payment. So they're only going to finance about 70% of the property.
Right.
They will not look at your credit.
No.
They will not look at your income, because they know that, again, if you're a foreigner, you don't have a U.S. credit bureau or you don't have U.S. income. So they carefully curate this program to, again, cover their risk, obviously cover the borrower's risk as well, ensuring that the debt service ratio is 1-to-1. And that's pretty much all you need. You need a valid passport, and you have to have your funds in a U.S. bank account up to 30 days before your transaction.
Yeah, and I definitely keep a valid passport. You know, I like to jump on a plane anytime I can.
You have to. Miami's
Anytime
nice.
I can. Yeah, so that's for sure a good idea, you know, to always have a valid passport.
Always.
Especially if you're looking to invest in U.S. real estate. Now, when it comes to the debt service coverage ratio, what is the ratio exactly? For example, is it 1.2, 1.3? You know, like what do banks look at?
Yeah. So again, ideally, the higher the better.
The higher.
Right? It means the higher the cash flow the property is, the more profitable it is, right? Yeah. For this program specifically, they really look for 1-to-1.
1-to-1.
So as long as it's 1-to-1, as long as your rents are covering all of your expenses, you're good to go.
Oh, that's great. Yeah, break even. So yeah, that's cool, because I know that some banks are like 1.3 to 1, you know, which means that every dollar that you owe, you have to have a property that's cash flowing $1.3. So, you know, what would be some advice if, you know, a Canadian looking to invest in the U.S. would come up to you and ask you for your advice? What would be some advice that you would offer a new investor?
Well, I think, what's your goal? And that's what it starts with, even when we're talking to clients here in Canada. It's what's your goal? Is it to purchase a property you're going to live in for 30 years? Is it to start investing? And then you can kind of see what makes the most sense for you and your situation based on what you have. So in this case specifically, because you're talking about a specific program which requires, you know, a bigger down payment than you would here, for example, is do you have this down payment? You have to keep in mind as well, and you know this as well, is that properties in the United States typically are less expensive.
Yeah. Oh, yeah.
There is, you know, an exchange rate to take into consideration, obviously, from the savings here, which is getting worse and worse.
Yeah.
Especially recently, but that's okay.
Yeah.
But again, if you do have the capabilities to, and, you know, the U.S. market interests you, it's called the land of opportunity for a reason. And, you know, there are properties that are a lot less expensive compared to similar properties here. There are properties that, you know, again, have that cash flow that maybe you wouldn't find here. So even if you did have the funds to invest in Canada, for example, would you? And that's a conversation to have. You have to be okay with, again, having a property, having an asset in a different country that's not easily as, you know, reachable than a property in your hometown, for example.
Yeah, and I find it interesting because even though as of the time of recording, the Canadian dollar versus the US dollar is really not that sexy.
Yeah.
Okay. Even though you're losing on that conversion a little bit, your purchasing power goes a long way. Like, for example, in certain states, you could buy 3 units for less than $100,000.
Yeah.
And, I've been looking around and I saw a sixplex in an area of Ohio for $200,000. Full brick, detached sixplex.
Absolutely.
Where here in Montreal, that is at least $900,000, depending on the certain whatever.
Yeah, minimum,
area.
absolutely.
Yeah. So, you're looking at 6 units at $200,000 US, even though you're losing a little bit on the conversion.
Yeah.
You're gaining on the purchasing power, in my opinion.
Absolutely.
Definitely. Yeah.
Where you're gaining on the purchasing power. Again, you talk about a sixplex potentially in Montreal. Is it going to cash flow as much as, that sixplex in Ohio you mentioned? Maybe, maybe not. One thing I do want to mention that's incredibly interesting is that under the program, the DSCR program I was mentioning for non-residents of the United States, is that you can purchase property in an LLC, a limited liability corporation.
Okay.
So you can go ahead and open up an LLC. Again, before I give any advice, always speak to an accountant or a fiscalist before I get in trouble.
Because we are not accountants
We
or
are not.
fiscalists.
We are not.
Just
We are not.
insert disclaimer here, guys.
But under this program, you can also purchase properties under an LLC, which is very, very interesting because the legal owner of the property is the LLC. And then everything funnels through there, obviously. So all the rents you collect every month, all the mortgage payments, tax payments, insurance payments go through there. And then if there's any, extra funds, once again, I'm not an accountant, but you can leave them in the LLC. So, you wouldn't have
Keep
to...
it there.
Exactly.
Keep the money there.
So you wouldn't have to declare income twice, let's say. So your LLC would definitely pay taxes, to the state and to the federal U.S. government. But then whatever's left, if it stays there, you wouldn't have to declare it on the Canadian side as well and get double taxed.
Yeah, and because the minute you transfer your American money to your Canadian accounts, that's where you're subject to tax.
Absolutely.
Yeah, that's where you're subject to tax, and keeping the money in the LLC is a great idea, and reinvest that money in the U.S.
Yeah, so that's the thing too, and that's the goal. If you do want to build a nice, real estate portfolio, and you do it under that method where you need the initial deposit, the initial contribution, the initial down payment, but then if you're cash flowing every month and you keep everything in the LLC, well, you just rinse and repeat. You build, you build, you build, you buy. You build, you build, you build, you buy. Yeah. And then you're going exponentially, a lot quicker than you could in other countries. And again, in a very, very safe, advanced, first world, best country in the world, in my opinion.
Yeah.
So there's a lot of opportunities there to be had. And that's why they have these programs. It's because they know there's demand. People want to invest in the United States. And again, whether it's in Florida or in California or New York or in Texas or wherever it is, you can always find an opportunity. And it's really just looking at what your goals are, what you have available to you, your comfort of a risk level, quote unquote, because again, you do have that international factor involved. But these lending programs, especially the DSCR program, enable you to really take full advantage of what they offer you and to really get a foot in the market.
Yeah, and even if we look at the numbers for a second, like they just make so much more sense. Like for example, in Ohio, which is an area that I'm looking heavily into and I've been looking heavily into, in the state of Ohio, in certain markets, single family homes are selling for $50,000 a home. And for $50,000, you get a 2-bed, 5 bath, or a 3-bed, 1.5 bath. And it rents for $900 to $1,000 a month.
Yeah.
Where else are you going to purchase a house for $50,000 US? That's going to rent for $900 to $1,000 a month.
Absolutely.
And even if you have to put your 30% down, it's $15,000 US as a down payment. And with the conversion and everything.
Absolutely. Now you do have to account for some closing costs, an inspection, a lawyer, a notary,
title companies.
Absolutely. So there are some closing costs that aren't uncommon. They're everywhere, right? But it really is a cool option. And again, the common misconception when you're looking to purchase property in another country, but especially the United States, let's say for our case, is that if you own a property here, you would have to refinance it here and then buy cash over there.
Yeah.
And then you're really, you're paying a Canadian mortgage.
Yeah.
you're really maybe leveraging or over leveraging sometimes an asset that you already have. Whereas there, you can really just get a loan.
Yeah.
It's very, very possible. You have the down payment, but all the programs are there for you and all the advice is there for you. And then it's really up to you where you want to take it.
Yeah, and this seems to be like a growing trend in the last 5 years is Canadians purchasing U.S. real estate. And again, it may not be for everybody, but for the, investor who's a seasoned investor, it is a very interesting play.
Yeah,
to
absolutely.
do. Yeah, it's a very interesting play for a couple of reasons,
Yeah.
Purchasing price being one of them,
Yeah.
that we talked about, qualifying as well. I know a few people who are self-employed here in, Montreal, and they'll never qualify with a bank.
Yeah.
Because you need to have minimum 2 years of consistent revenue to qualify for a purchase here in Canada, right? So what are they doing? They're taking their money that they have put aside and they're putting it in the U.S.
Yeah. And again, you can also diversify your investment.
Yeah.
Right. So the same way if you're investing in stocks, well, you'll invest a bit in a balanced fund, a bit in a growth fund, a bit in a conservative fund potentially, or a bit in the U.S. market, a bit in this market, that market, Canadian market, etc. Right. So if you are an investor, and again, housing markets sometimes are volatile, maybe a bit more in the United States than Canada. But then again, in Canada, you have those rising costs as well that we speak about all the time, that really happened in the last 4 or 5 years.
Yeah.
So if you can diversify your portfolio a little bit, you'll also be less at risk, of those market changes.
100%. And I couldn't agree with that more, and diversification is key in any type of investment that you do. Real estate, stocks, even just businesses, diversification is key.
Absolutely.
Because if COVID did teach us anything, it's which businesses are expendable and which businesses are essential. And by diversifying, you cover all your bases that way.
Absolutely.
So what do you think led Orbis to this conclusion of, financing purchasers in the U.S.? What do you, in your opinion, what do you think was the driving factor for that?
Yeah, no, it's very important to remember that, again, it's a U.S. division,
Yeah.
right? So it's wholly operated in the United States, qualified under NMLS, which is their mortgage branch or their mortgage, let's say, national board overview. Exactly. I think it's just because, again, there's so much demand for it. And I think there's, the United States has 50, 60 million people. So there's a lot of purchases. There's a lot more purchases than here, right? So I think just in general, being in the United States, it's where everybody wants to be, right? Because it's the biggest market with the most money. So I think that's the first thing. It's really just because it's a massive market. And if you want to grow and make money, you want to be in the biggest market possible.
Yeah.
I think also there's a massive demand, again, for Canadians who want to buy a second home or who want to invest like us. And I think it's just another way to check off the boxes and really complete your product offering to clients.
Yeah. And it's interesting because I follow a couple of people online, and one of them being from, Kitchener, Ontario. And he recently, after flipping over 150 houses in Ontario, he recently shut down all his operations in Ontario, and he's solely a U.S. real estate investor. And he's doing deals in Florida. He's doing deals in Texas, and I think that from following him for the last couple of years, one of the things that I seen is how easy it is to make things happen in the U.S.
Yeah.
Right. Give an example, qualifying for a DSCR loan, being 1-for-1 there. It's pretty easy. And it seems as though the land of opportunity encourages you to take risks and do business. Whereas here in Canada, although it's a great place to live, doing business could sometimes be challenging, and as businessmen and business people and real estate investors, many people have seen challenges, setbacks, hurdles, and I think that this is one of the reasons why it is driving people to do business in the United States. Because after all, as a person in business, you're better off doing business somewhere that you are encouraged to, and there are things working to your advantage. For example, landlord real estate boards in Quebec suck. In Ontario, they suck.
Yeah.
If I have a tenant in my property that I paid $600,000 for, and I had to put 20% down, which is $120,000 plus closing costs, and he's causing damage and wreaking havoc and not paying, I have to follow the court system, which could take 6 to 8 months.
And that damage is
ongoing, and it's coming out of my pocket. Whereas in certain states, specific colored states, if somebody's in your property and they don't pay the rent on the first of the month, they're out in 30 days. There's no court to follow. There's no nothing. You send them an eviction notice, and then you show up with a bailiff and the sheriffs and movers, and in 30 days they're out.
Yeah. Now, given there should always be some middle ground, maybe.
Yeah,
there should definitely, the United States is a lot more owner friendly, right? Definitely. And that's why people want to invest there.
Yeah,
is because if you're gonna, like you said, make a big deposit on a property here, and then you can't, control your property too much, or your property is being damaged, and you have to go through so many hurdles to just prevent damage in your property. What's that incentive to become a homeowner, become an investor?
Yeah,
So it's really, really difficult. And again, it's the land of opportunity, the land of the free for a reason.
And rent control is a huge thing too. I mean, for example, if we both have a property in the States, if we both have a property on the same street, and my property is renting for $1,000 a month and yours is renting for $1,200 a month, I don't have to wait for any term of the lease to expire. I don't have to follow any sort of rental, increase grid or percentage guidelines. I just simply send you a notice saying, hey, by the way, in 30 days, your rent's going up to $1,200 because the house next door, which is the exact same house, is renting for $200 more a month. And we don't have that privilege here in Canada.
No, absolutely. And again, as an investor, you love that, right? Because you always know that you're getting top dollar for the asset that you have, for the apartments that you have. And you know that, again, we go back to that DSCR, but that program that has to be 1-to-1, you have to be breaking even, right?
Yeah.
But when you do stuff like that, you can always up your DSCR.
Yeah.
Right.
Exactly.
And very, very quickly. So you can cash flow, so much more than you could in other places. And that's what makes it a great investment.
Yeah. So when it comes to down payments or anything, do you guys, when you verify the down payment of a Canadian investor, is there a certain thing you look for? Obviously, I would imagine there's a minimum that you would look for, or the bank would look for.
So again, for this program specifically, the clients have to have a minimum down payment of 30%. Typically, it is 30%. And it has to be in a U.S. FDIC bank account 30 days before the closing. So if you're closing on January 1st, as long as, your money's in the account, should have been a few days ago, but as long as it's in there a few months before, you're good to go.
All right. So, I mean, before we close off this episode, is there anything else that you want to let our listeners know, offer our listeners, or any words of wisdom?
What I want to let everybody know is that when you have a question, ask the question.
Yeah.
When you're talking about myself or you're talking about Giancarlo or Anthony, whoever it is at your disposal, there's no stupid questions. So whatever questions you have, you let us know. You can write to us, obviously, through Proventure. If you find our emails online, phone numbers, whatever it is, give me a call, send me an email, reach out, and I'm happy to answer any question, whether it's relating to Canada, the Canadian market, whether it's relating to some of the United States programs I just mentioned. And we're always here to help find solutions and meet your goals.
Amazing. Well, man, it was great having you back on.
Absolutely. Thank you. It's been too long, actually.
Yeah, and stepping in, I really appreciate it, and we're glad to have you.
It's my pleasure.
And for anyone listening, guys, don't forget to like, comment, follow, or subscribe wherever you're listening. We're on Apple Podcasts, Spotify, Instagram, YouTube, you name it. We're probably on it. Our marketing director takes care of all of that stuff, and he's doing a great job. So if you don't find us somewhere, let us know, and we'll make sure you could find us somewhere. And until next time, guys, see you soon.
Take care.